Welcome to week two of me trading for a living, where I am trying to emulate earning just over $53,000 a year through $125K of capital. And if you are brand new to this series, there is a playlist down below that has all the weeks in there. Well, we're only on week two, so it has one video in there of week one where you can check out all the rules and we go into more detail about the challenge. So what we're looking to do in this particular video is recap the outcome of week one's trades and then walk you through the trades that we've done for week two. And then we'll look at the consolidation of how much money I've made versus trading a traditional day job of over 50,000 a year. If you like the sound of that, smash that like button. Don't forget to subscribe and hit that bell notifications, because I've got weekly videos on not only this particular challenge, but I'm doing a number of challenges and how-to options videos as well. So at the moment, as you guys know, that I'm trading two stocks at the moment with the 125K, and I think if I add up these two, I've invested 100,000 at the moment, and I'm selling put options on Tesla and Meta. Tesla makes the bulk of the income so far, just due to the price of Tesla and the volatility of Tesla. The premiums are absolutely awesome. Meta as well, I do like that stock. So if I do get assigned 100 shares of Meta, more than happy to kind of keep that in there. I have the ability to potentially do two contracts because I got 125K. But at the moment, because the market has kind of taken off in this past week, I feel, and I'm hitting the goals I need to hit, I feel I don't need to stretch and do any more trades outside of Tesla and Meta. So I actually did two trades on Tesla and one trade on Meta this week. And what you'll notice is, as we go through this challenge, is I generally don't close out trades. I generally roll trades, because if I want to continue selling puts on a particular stock, I do technically close it because I buy it back, but it's simultaneously opening a brand new sell order, so it does both trades at the same time, which is why I've grouped it in this for easier on the eye, so you can kind of see. So if we look at Tesla again on the 26th of July, I sold the 950, so I obtained 950 in premium. By the 1st of, and again, this was expiring August 5th, right? So by the 1st of August, the Tesla started to go nuts. As you can see, Tesla's been on a rampage and down today. Probably should have waited and sold the put. That's quite annoying, but you know, we are where we are with these things. It was relatively cheap to buy back. So what I decided to do is open a cheeky trade where the expiration date was exactly the same, but with a lower strike. So with a higher strike. So I bought back the 720 for $32, and on the same day, with the same expiration of August 5th, I moved my strike up $80 to 800 for $127, netting me out just under, or at $95. So I made $95 for doing a 4 day, a 4 day trade effectively. But it was technically 3 days because I played my next trade on the 4th. So I love these types of trades because I'm squeezing out more premium with the same expiration, because I've not had to go increase my time value. So there's two ways to make more premium. You either move your strike closer to the money, or you increase your expiration. So what I did was I moved the strike closer to the money by $80, to pick up some additional premium. And you can see that 3 days later, I managed to buy back this 127 put for $13. So again, as you saw here, Tesla had this massive kind of move up, and at these levels over here, I was able to buy back this option relatively quickly. So then yesterday, I think it was, I'm shooting this video on a Friday, it's Thursday, I took the trade. I then decided to sell the 850 put for 725. Now, so the 850 put is here, and again, I did it yesterday during this. I saw Tesla pull back slightly. I would have got slightly more premium. So my option that I sold for 725 is probably worth 800, 900 by now, just because of this pullback, and that's kind of how it works. But I've given myself some leeway here of around now $50 leeway before my option starts getting in the money. And again, this is August 12th, so next Friday. So it's around 8 days away from when I place the order to the expiration. And my logic behind this is mainly down to we've got, a slight gap here, as well as I kind of like this from a support area perspective, resistance and support. So I feel that price may potentially consolidate around this area if it gets to it. And also, if we look at this kind of trend line, this upward bullish momentum trend line, you know, price will probably react to this trend line, which is again above my strike price. So again, using technical analysis, support and resistance, trend line analysis, this is where I think the kind of pullback, kind of cool down period would be for Tesla, and then potentially making another move up. If it goes down, again, I'll have the ability to roll, but if I roll, depending on how close I am, that is going to, eat into my potential premium, or I might take the shares and start selling covered calls on it. So I'll cross that bridge when I get there. I feel I've got a bit of leeway at $50 to kind of see what happens from there. So, and again, I've got the screenshots of the Tesla trades, so you can kind of see what they are. And I have this screenshot tab where I'll update all my trades that you can see. So we have a log on it from there. Meta is a bit more simple. So on the same day I did or 2 days after the Tesla one in week one, I sold the 148 put expiring next Friday for 220. And then on the 4th of August, a day before expiration, it was worth only $2. Because again, if you look at Meta, what was the thing? 148. Meta again, 148, is around this level over here. And you can see that they've got some strong resistance on this ascending triangle we talked about last week, that I wanted to make sure when earnings came last week, this candle here, and it pierced through, I then sold a put, got some very good premium, because when you sell puts on premium, down days is when you want to do it. And I struggled here because you see, like, ever since that day, 1, 2, 3, 4, five upward days at the moment that it's had, and it's hard to sell premium or to gain enough premium when there's not a pullback. And because I'm trying to do this every week, I need to place the trade. Whereas if I wasn't trading on demo, then more than likely I would wait, because there's no rush for me. But if I'm trading for a living and I need to bring money coming through the door, then I need to keep placing those trades, which probably isn't the most optimal thing, thinking about I need to make a certain amount of money every month, to waiting for the right setup when you're not dependent so much on utilizing that income. So that's one thing I've kind of learned from this. I'm kind of forced to make trades that at strikes that I probably wouldn't really want to do, or would rather wait for a pullback at this area and then sell the 144 or 140. So, we're only in week two, so, we'll see what happens if it does pull back. Probably will accept taking the shares, and you'll get some good aggressive covered calls if the worst was to happen at 155. So not a bad time, I think, to kind of pick up some shares if that was to happen, because earnings are out the way. So on that, I bought it back, and then I sold the 155 for $62. You can see that trade there. Buy back for $2, sold for 62. Again, netting me out $60 in total. So how much have I made inside week two? So if we recap on week one, I was $141 above the target. And in terms of the time spent, again, it was probably less than an hour, but I rounded up. So, I would have saved myself 39 hours, either still having a day job or enjoying life in general. And what I've added here, which wasn't in week one, is a cumulative view. So we can see where I am against the overall target to see if I'm falling behind or if I'm ahead. So if I unhide and show you week two currently, so what we're doing is adding up everything in week two, the 807 plus the Meta stuff's at 867, which is how this number comes here. You can see here that is 16% behind the target for the week. In terms of hours, again, it's roughly the same. It's probably a slightly lower than 1 hour. Just bear with me. My mouse sometimes decides to play games with me here. Here we go. there, and this is what made me put the cumulative view. So you can see when you combine weeks 1 and weeks 2 together, from a 9 to 5 day job perspective, we are at $2,000, 2,057, and trading we are 2,037. So we are $20 behind the overall target after week 2, which is basically I'm on track at the moment to do this. So again, because the wheel strategy is a bullish strategy and Meta and Tesla both rising, helped me. So this was a relatively easy week for me to kind of maintain these positions. If Meta and Tesla start dropping very rapidly, then that's going to cause me a bit of an issue going forward. But it's those times, the ones that I'm waiting for to see what I need to do. Do I accept shares? Do I roll? What is the right thing to do? And these other types of things. Because again, this is what I want to do, for a trade for a living, is I'm putting myself through this. So again, this is, entertainment purposes for you guys to track this journey. But for me, it's going to show, can I actually maintain this? And if you guys remember in week 1, the goal was to make 2,500 a month as a minimum from a consistency point of view. So I'm only $500 away. I should make that. I should make $500 in 2 weeks quite comfortably. So in terms of maintaining the consistency amount in month 1, I think I'll do that without any problem. So again, I can put food on the table. I can pay my bills. I can pay my rent. I might not be able to go out and buy lots of clothes and all that other stuff, but the aim here is, can I at least survive, on a 2.5 grand a month salary. Again, these are averages and things like that. But yeah, so at the moment, I'm really happy with where things are going. Make sure you like and subscribe. If you've got any comments, any questions, put them down below. As you can see from a capital perspective, I've still got 25K thereabouts available to me to spend. So if I'm short 1 week, I can do some stuff, and I will show you some stuff that I'm planning on doing with some other tickers that I'm looking at, and various other things as well to kind of supplement this, because I am behind. I rather, how I was ahead in week 1. I'd rather have that buffer of like a plus $200-300. So when you get these types of weeks where you're down by 16%, it kind of helps. And this 141 has come in very, very handy inside week 1. And you'll see that doing 2 trades, doing this trade here, picking up, just $95-96, whatever it was, has also helped me out to contribute, because I didn't need to place this trade. What I could have done is sold a put for August 12th on the 1st, but I thought, you know what, let's go pick up some more premium while I can, and then do another one for $725. So that was the kind of play that I wanted to go for. Really hope you've enjoyed this video. Again, the playlist is above. There's some other videos on there about options. If you're interested in the wheel strategy, make sure you click that link that's on there now, and I should see you guys in the next video.